Hello guys, today we try to see a new topic, which is what is CFD, contract for difference. I know most here in USA and Canada, they don't do that. They don't do CFD, but mostly European, they do it. And because they can't reach a lot of markets, so it is like an alternative thing to do trading. So let's go and try to see what is this CFD. Okay, so CFD, it stands for contract for difference. It is trading to profit from price movement without owning the underlying assets. It's like take it like, for example, as options. Okay, take it as options because you don't own anything. This is the most important thing that I will show. Okay, so you don't own anything. Don't own. It's like an option. And it is an alternative to traditional markets. Now, traditional markets, for example, when you want to, let's say you want to buy a stock, let's say Facebook, just an example, okay? You go to the regular broker, you find stocks, you buy Facebook, let's say you buy 100 shares, okay? Now, in traditional market, when you buy Facebook, you buy real shares. It means you own Facebook. You own these 100 shares. You can get what we call a certificate for that. And you can keep this certificate for 10 years, 20 years, 30 years. And this certificate is just a paper showing from the broker, from the company, let's say that you own 100 shares of Facebook. Okay, and it is like a check. Okay, you can cash it in order to get your money from these 100 shares. Maybe Facebook will be 500 or 1,000 or 5,000 in the future. Okay, so you will get that. Now, if you buy a CFD relying on Facebook, you are not going to own or to have a certificate for that, but you have something else, and I will explain this, which is a CFD. Now, most of Europeans, especially European people, they do a lot this CFD. Because, for example, they can't reach American USA or USA markets, and they can't buy, for example, Facebook or Twitter or Google or whatever stocks they are share, okay, or futures or commodity or currencies. They can't reach that, so this is an alternative. But in order to go ahead, we try just to see. It means, why would someone, instead of buying 100 shares of Facebook, he will go and he buys CFD, relying on Facebook? So it means there is a trick here. So why they do that? Okay, so let's go and see why is that. Now, the trick that you may ask why is that CFD, as something that you are trading, is leveraged. This is the most important thing that you should know about CFD. Leveraged, what does it mean? It means that if a stock is $100, this is the stock price, the ask when you want to buy a stock. let's say it is XYZ, just an example. This is the stock, it's $100. Now, you can buy this CFD that represents this stock, CFD. You are not going to put $10,000 to buy the 100 shares. So what do? For example, they ask you only 5% to own this stock, which is a CFD. 5%, what does it mean from 10,000? It means you are going to pay $500, okay? $500 to own this stock. It's like it's the same as option, okay? It has a similarity with option, but there is a big difference between CFD and options. We are not going to do that, but I will try just to explain to you what is the advantages, okay? What are the advantages? Why the people they go and they buy CFD? Now, understand that millions of people in Europe and in Africa, in the world, because when you find a website right now, we are in a small planet. It means with internet, you are here in USA, or you are in Africa, or in Asia, or South Africa, or you are in Ireland, or you are wherever you are. If you have connection, internet connection, you can see a website that it is in Europe or Asia or Africa or America, and you can do CFD. Okay, so it's very easy. Now, most of the people who have little money, this is why they go to this thing. Okay, they have little money, 1,000, 2,000, 500, depending on the broker. Okay, depending on the broker. So right now, let's go and see the advantages of CFD, and this is like the most important thing that you should know about this. Okay, so let's go now. Advantages of CFD is no shorting rules. This is the first one. So what do you mean by that? No shorting rules. It's not like sometimes when you want these two are the same, no borrowing stocks. It means when you are going to do, let's say, to short a stock. Just I will give you what you do in traditional thing. You want to short a stock, so what you should do, you should borrow. Okay, you should borrow shares. This is what you do when you are going to sell short a stock. So what does it mean? It means the broker provides you with these shares. If the broker has no shares to give you, okay, to lend it to you, you can't short. Okay, but in CFD there is no borrowing. Okay, no borrowing at all. No borrowing. It means you just click, for example, on sell, and you are selling short this stock, this CFD. Okay, so it's very easy. Now there are no other rules. You just you put sell any CFD that it is in the broker. Okay, for example, broker. Let's say the broker has 100 CFD. Okay, it's mixed. 100 CFD. We have, for example, oil. We have currency. You have indexes. you have stocks, whatever you want. You just click sell, and you are shorting this stock down. It means if this CFD go down, you make money. Okay? So for the rules, as they say, there is no rules at all. It's so simple. It means it's always available. You hit sell and you are shorting. In stocks or in traditional market, it's not as easy. Sometimes you want to short the stock, but the broker has no stock, so you can't short it. Okay? Now, the other thing, no restrictions of minimum amounts of capital. It means when you are trading, they can, for example, you want to open an account, you have $100, they let you open an account and trade the CFDs that are so cheap. Let's say a CFD is only $50 or $40 or whatever. So they can let you trade whatever you want. That's why people who have little money, they can go here. Now the other advantage, which is very good, you can trade stocks, index, treasury bonds, currency, sector, and commodity. It's a lot of things you can do without reaching these markets like traditional market. For example, if you want to buy in a broker, if you want to buy treasury bonds, for example, treasury bonds, most of the brokers, they don't have bonds. Okay, they don't have bonds. You should go to a big broker that have bonds. Most of the brokers, they don't have bonds. Okay, they don't have currency. It means you should go to a specialized website where there is currency. So you see, if you want, for example, commodity, where it means futures, oil and the other stuff, and okay, so you should have an account in futures. So you see that with this CFD, it is an alternative to the traditional market. It means it's so easy for you to reach any market. And this is the best thing that you can have with CFD. Now, since anyone can do it, anyone with little money, you have $100 or $50, $200. It's like cryptocurrencies, whatever money you have. You know, some people they don't have money, so they just go to these brokers and they do the thing. Now, another thing we try to see now, the disadvantages of this thing. Okay, disadvantages, it means what are the bad things that you should be aware of and understand, that you should understand how it works, how you get your money, what are the risks in order to do this CFD. It's not just because it is cheap, you just go and you throw your money, because your money will be gone. Okay, so let's go and check the disadvantages or the bad things in CFD. Okay, so the disadvantages, we can see trader pays the spread. This is the most important thing I'm telling you. Okay, now the spread, what is it? When you want to buy or sell, we have what you call the bid, and here we have the ask. Now, if you are going, it's like a stock, it's the same. The spread, it's spread in CFD, it's the same on stock. Okay, so the ask, let's say the ask is $10. Let's say 60 cents. Let's say the bid is $10. Okay? Now, in CFD, the spread is wide, and this is the trick that you should always think about. It means, since the bid and the ask is so wide here, this 60 cent, whenever you buy, this 60 cent, who will take this 60 cent from the bid and the ask? It is your broker. It is not as I told you before. It is not, as I told you before, the market maker. Here there is no market maker. The market maker is the broker. Okay? So, instead, the broker take commission. Instead of taking commission, you will know how much he will take. Now, you give him permission, so there is no commission in CFD. So you will let him take this bid and ask. And this bid and ask is wide in CFD. So whenever you buy, you are buying more expensive than the real thing. You are buying more expensive from the ask. And then you are selling cheaper to your broker. Okay? So buying more expensive and you sell cheaper. So what does it mean? It means you are losing a lot of money from the spread. Losing a lot of money. When you buy, you are not buying with the real price, with the good price. You are buying with the expensive price. When you sell cheaper. In stocks, the most of the stocks who have high volume, you will find 1 cent only, and this is taken by market makers, and your broker takes commission, like $5 or $6 or $4. Okay, so this is the first disadvantage, and this is what makes CFD bad. Because whenever you buy, you are losing money. Whenever you sell, you are losing money. Except when this CFD is doing good. Okay? When it moves good, this is where you can make money. The second thing I want to tell you is not regulated markets. Understand that when we say not regulated markets, it means since there is no real thing, because all this CFD is not real. It has a value, yes, but it is not real. It doesn't depend on, you don't own anything. It is just a copy of the market with other rules. It's just like an alternative. It means a copy to the traditional markets. When you own, for example, a CFD in Facebook, you don't own anything. Okay? So most of the people, when they want to do trading, this has to do with reputation of the broker. So the broker will try, if someone wants to do that, to do trading in CFD, the person in Europe or elsewhere, he should choose, okay, best known broker with less spread. Okay, because if you are going to pay more on the spread, you will be losing a lot of money. And most of the people who are doing CFD, they lose money. For example, if it is in regular traditional markets, you can find a lot of information about whatever you are buying. For example, stocks. Okay, let's say you want to buy Facebook. You can find Facebook as a company files information to the market, and you can find information about Facebook, about balance sheet, about what does it do, about debts, about anything that you want to learn about the company. Okay, about the company. But when you buy a CFD, there is no stock or company information. Okay, you are just buying a copy of the stock, which is called CFD. And not regulated, it means if things happen and they for example, they stole your money with for example, bigger spread. Let's say it is $1 here, and here you find $2. Excuse me, $2, not $2. It means they take 50% from $2 to $1. It means they take $1, which is 50% of your money. They can't do that. Now, if they do that, you can't do nothing. That's why we say not regulated. It's like the OTC market in USA here. Okay, so not regulated, it means you find a company, it's $60. The next day you can find it $1. You can say nothing, and they can give you no explanation why. Okay, but in the stock market you can go and you can check why, because there should be a reason for that. Okay, so that's it for CFD. So if you are a beginner and you want to do this kind of things, understand that this is a leveraged thing. It's like options, it's like currency, it's like futures. Understand that since you are putting little money to control big money, so the game here is always against you, unless you are a very experienced trader and you trade for a long time and you find a way to make money from this thing. Because as I told you before, whatever you do, when you have a good strategy, you have a strong command of risk, you can try to make your own strategy if you want. Whenever you begin to make money in the long run, understand that you are going to be successful. But trading for 1 month or two or 1 year and then you stop, because when you stop, it means that you can't continue searching for the rules for your strategies. You stop. Whenever you stop, nothing will be done, and you fail. This is not just in stock market, but in everything you do in your life. Whenever you begin something, like let's say you go to college and you begin to study something, and then 1 year and then you drop it, and then you go to another thing, a second thing, third thing, fourth thing, then you start a business, then it doesn't go well, then you stop. So the fact of stopping is the worst you can do, because you will not learn the successful strategies in the future. You should need to stay in order to understand. Okay, so thank you very much. Please subscribe to my channel. See you next day.